Welcome back, gentle folks. Now we're going to look at incomplete records and missing figures. In practice, part of the information relating to cash receipts or payments is often missing. If the missing information is in respect of one type of payment, then it is normal to assume that a missing figure is the amount required to make both totals agree in the cash column or the cash and bank summary. This does not happen with bank items owing to the fact that another copy of the bank statement can always be obtained from the bank. An example below shows an is the example below shows an situation where the figure of drawings is unknown. The exhibit also shows a contra entry made in the cash book when receipts are banked. For information in cash and receipts is available. Now so cash paid in during the year is 35,500. Receipts from the debtors, paid suppliers, whatever. Alright? Drawings figure is missing for cash. Estimate is paid and so forth. Anyways, first thing is first. Balance for 2004 beginning, which is 150 for cash, 3,900 for bank. Sorry, 11,200 for bank, which is this one right here. This is entered right here. Then you have cash paid into the bank during the year, which is the contract entry here. So, all right, see it there. So for the on the let's go now on the debit side, you'd have debited bank and credit what cash column, right? That's cash book. Banking's contract entries is 3,500. You debit bank account and create the what cash column. The bank column create the cash column contract. All right, then you have receipts from debtors, which is for cash and for bank 47,250 for 47,250 for cash and 46,800 for what bank. Money paid to suppliers, which normally would have been accredited. So you have 1,320, then 44,930 credited, cash and bank. Expenses what paid, credited as well, 150 and 3,900, cash and bank. Then you have the balance is 250 and what 4460. You put in those figures into folks first and foremost for the anything else. Now to find drawings, no, you're gonna add up this side, you get that, then minus what's added here from this, and you get what drawings. You add up the bank column here. My apologies. You add up the cash column here. My apologies. Cash column here. Add up the cash column here as well with 35, 5, 13, 20, 150, and 250. Add them up. You then subtract the figure that you get from here from 47,485, and that will give you the figure for what drawings. All right. The amount needed to make the two sides of the cash columns agree is what 10,265. That is 47,885 minus what 35,500, 1,320, 150, and 250. This is the figure for drawings. Alright. That's how you calculate the missing figure for drawings in that situation. Alright. Let's go to another one. The example below shows an example where the amount of cash received from debtors is what? Unknown. Alright, let's go. So see the example here. So the amount for cash received from debtors is unknown. So you want to calculate it, alright? So in this case now, you have cash withdrawn from, so you'd have entered the 78,080 in the bank column for receipt from debtors, right? So you go. They have cash withdrawn from bank for business use. This is amount which is used besides cash receipts from debtors to pay drawings and what expenses. 10,000 what 920 for bank for business use, right? Let's go now. Alright. So first thing is first, you put in your balance, which is 40 and 15,660. Then you have receipt from debt. Then you have cash withdrawn, and that is a counter entry. This is a counter entry as well. So you'd have, so bank would have been reduced and cash increase, right? So you debit the cash column and what credit the bank column, which is 10,920. Good. Then you have paid to suppliers. First, sorry, receipts and debtors, right? So you have debited that, right? You get 78,080 for bank, but you don't know the cash. You want to find that figure. Let's go. Then you have paid the suppliers now, which is 6,800, which is for check, which is for bank. We assume this is check, actually. Expenses now, cash 640, bank 2,230. They have drawings 21 180 for cash and 215 for what? Bank. And then put in the balances as well. You put in the balances first, 70 and the what? 375. Good. Now you want the amount for cash for receipt from debtors. So you're gonna add up the cash column. Then you add up this column. Subtract the smaller this side from the what? From this side. So you're gonna subtract 10,960 from 21,890 to get the amount for what? Debtors. As it is only as it is the only missing figure, receipts from debtors is therefore the amount needed to make the side of each cash column agree, which is 10,930. That is 21,890 minus 10,990 plus 40, and that will give you 10,930, and that's it for missing figures. All right. It must be emphasized that the use of balancing figures is acceptable only when all the other figures have been verified. Should, for instance, a cash expense is omitted when cash received from the debtors being calculated, this should result in an understatement not only of expenses but also ultimately of sales. Where there are two missing figures, quite often the only cash expense item for which there is some doubt is drawings. Receipts will normally have been retained for all the others, right? If both cash drawings and cash receipts from debtors were not known, it would not be possible to deduce both of these figures separately. The only course available would be to estimate whichever figure was more capable of being accurately assessed. Use this as a known figure, then deduce the other figure. However, this is a most unsatisfactory position, as both of the figures are estimates. The accuracy of each one relying entirely upon the accuracy of the other. Alright? They have cash sales and purchases for cash. Where there are cash sales as well as sales and credit terms, when the cash sales must be added to sales and the credit to give the total sales for the year. Sorry. Where there are cash sales as well as sales and credit terms, then the cash sales must be added to the sales and credit to give the total sales for the what? Year. This total figure of sales will be the one shown in the trading account. Alright? So cash plus credit must be added together. Similarly, purchases for cash will need to be added to credit purchases in order to produce what? The figure for of total purchases for the trading account. That is common knowledge, right? Stock stolen, lost, or destroyed. When stock is stolen, lost, or destroyed, its value will have to be calculated. This could be needed to justify an insurance claim or to settle problems concerning taxation. If the stock had been valued immediately before the fire, burglary, etc., then the value of the stock loss would obviously be known. Also, if a full and detailed system of stock records were kept, then the value would also be known. However, as the occurrence of fires or burglaries cannot be foreseen, and many small businesses do not keep full and proper stock records, the value of the stock loss has to be calculated in some other way. Example Exhibit 35.4 and 35.5 will now be looked at. The first exhibit involves a simple case where figures of purchases and sales are known. and all goods are sold at the same gross profit margin. The second exhibit is rather more complicated. Yes, so we continue. So, however, the first exhibit involves a very simple case, where figures of purchase and sales are known, and all goods are sold at the same gross profit. Second exhibit is rather more complicated, right? However, before we go there, I want to show you something first before we go there. So let's look at this first before we go to the calculation of that question. Now we look at markup and margin now. The purchase cost, gross profit, and selling price of goods or services may be shown as follows. Cost price plus gross profit equal what? Selling price. When shown as a fraction or percentage of the cost price, the gross profit is known as a what? As a markup. Alright? When shown as a fraction or percentage of the selling price, gross profit is known as a what? As a what? Margin. Go again. When shown as a fraction of what? Or percentage of the selling price, gross profit is known as the margin. When shown as a fraction or percentage of cost price, and cost price in this case means cost of goods sold, the gross profit is known as what? Markup. Alright? We can calculate marginal markups using this example. Cost of price $4 plus gross profit $1 equal to what? $5 selling price. The markup would equal to, in this case, gross profit divided by cost price as a fraction, or if required as a percentage, multiplied by what? 100. So if 1 divided by gives you 25%. Alright? Then margin, gross profit of over selling price, 1 over 5, that will be equal to what? 20%. So that's where we get it from. So in this, so when you see anything markup margin 20%, you know how we got it. All right. Now, how we use these now to calculate missing figures? Now, we can use these ratios to complete trading accounts where some of the figures are missing. In all the examples in this chapter, we shall assume that all the goods in a farm have the same rate of markup and ignore wastages and theft of goods. Now in this case, example, now you have stock of 400 opening stock, closing stock of what? 600 purchase of items, but a uniform rate of what? Markup of 20% is applied. Alright? So find the gross profit and the what? Sales figure in this question. Now remember that markup is what? Is a percentage of the what? Cost price or the cost of good sold. Good? Now, so let's find the gross profit and sales figure. Now, firstly, you prepare a trading account with the various missing figures known as shown as a blank. Like this, you want sales missing and gross profit missing, but you want to calculate them now, right? You can pause the video and write this down as we go along. Please, gentle folks. Thank you very much. Now, it is known that cost of goods sold plus gross profit equal what? Sales. And you know that you can use markup to find what? Profit. Because cost of goods sold plus percentage markup equal what? Sales. Now, so you're going to find 20% of the 5,000, which will give you what? $1,000. Right? So it'll be 0.20 multiplied by 5,000, that'll give you what? $1,000. So therefore, your gross profit is really what? 1,000. And you add it together, you get what? Your sales. So your trading account can be completed by inserting the gross profit of what? 1,000 and $6,000 for what? Sales. Just like this. Alright? Good? If you don't get it, you go back to it, please. So instead of using gross profit here, we replace it what? It can be so gross profit can be replaced with what? 20 percentage markup. Alright? Another example now. This case we could use the what? Margin. So you already find the gross profit and the figure for what? Purchases. Nice. Now, remember, cost of goods sold plus gross profit equal what? Sales. Good? Sales minus gross profit equal what? Cost of goods sold. So therefore, sales minus 25% margin would equal to what? Cost of goods sold. Alright? Now, you will find 25% of what? Sales will give you what? 1600. You get 4800. So therefore, your gross profit will be 1600 right here. Your cost of goods sold will be 4800, which will go right here. Right? Sorry, your cost of goods sold will be 4800, which will go right here. So you go. Okay, that minus 48 from 6400 to get what? 1600. Good. Now, the following figures are known. These and these, right? These two, right? So how do we get this right here? So you have subtracted something, subtract 800 from something to get 48, right? So what you're going to do is add 800 plus 48 to get the figure that it should go right here. Good? And that will give you 5600. You'd have added something to 50, to 500 to get what? The 56. So you're going to minus 500 from 56 to get what? 5100. So your purchase figure would be what? 5100. And here it goes. So the missing figures are found by normal arithmetic. 2 less 800 equal to 48. Therefore, the two of them will give you what? 5, 6, 8 and that. You'd have to minus 8 from something to get your 4, 8. That's how you go. So therefore 2 will be what? 5, 6. Opening stock plus 1 would equal to what? 5, 6. Therefore, you do the opposite. Subtract 500 from 5, 6 to get your what? 5100. The complete trading account can be shown as follows. Alright. This technique is very useful by retail stores when estimating the amount to be bought if a certain sales target is to be achieved. Alternatively, the stock levels or sales figures can be estimated given information as to what purchases and opening stock figures. Alright, so that's that for that. Alright, good. Then now we're going to go to calculating using this similar method to calculate the missing figures that I was to do the question that we are supposed to do at this time. Calculation for this now using a similar method that we showed you a while ago. Alright, J. Collins cost lost the whole of his stock in a fire on March 17, 2009. The last time that a stock taking had been done was on December 31, 2008. The last balance sheet date when the stock was valued at what? Cost 19,500. So this would have been the opening stock for 2009. Purchases from then until 17th of March amounted to 68,700 and sales in that period were what? 96,000. All sales were made at a uniform gross profit margin of what? 20%. Good. First, the trading account can be drawn up with the known figures included, then the missing figures can be what? Deduced. Let's go now. Similar method a while ago to show about margin and markup. Now in this case we're using a what? Ah, gross profit what? Margin. Therefore, you're gonna find 25% of what? Of the sales figure. Good? 10% of sales figure, I mean. Now the missing figures can be deduced. It is known that the gross profit margin is 20%. Therefore, gross profit is 20% of what? 96,000, which is going to give you what? 19,200. That will be so that you will place in 19,200 here. So for A. Now for B, now remember, For B, you'd have subtracted something from 96,000 to get what? The A. So therefore, we're going to do opposite of what was being done. So we're going to add 19,200 plus what? B. Now in this case, that would equal to what? 96,000. So to find B, all you do is to find the difference between what? 96,000 and the 19,200. Therefore, you're going to subtract 19,200 from what? 96,000 to get the figure that should be here. Good? Alright, so should have been 96,000 minus 19,200. So you'd have 96,000 minus this one, right? So you do some alright. You want to find B, right? So you're gonna bring this over the equal sign, turn negative. That's to get 76,800. You should put that right here. Good? Now that B is known. C can reduce. You have to subtract C from 88,200 to get what? 76,800, right? So there you go. So what did you do in this case now? What did you do? So you will subtract the 76,200 now from what? 88,200. And that will give you what? 11,400. Difference between what? 76,800 and 88,200. That will give you what? 11. The figure for goods destroyed by fire at cost would have been what? Therefore 11,400, which is what? Closing stock. You should always do this calculation in sequence shown. A, then B, then what? C. Alright? So go to the other example now. T. Scott had the whole of his stock stolen from his warehouse on the 9th of August 2006. Also destroyed were his sales and purchase journals, but the sales and purchase ledgers were salvaged. The following facts are known. Stockers, stock was known at last balance sheet of March 26 to be 12,480 at cost. Receipts from debtors during the period April 1, 22 August 2006 amounted to 31,745. Debtors were 14,278, and at August 22, 2006 they were what? 12,333. Payments to creditors during the period April 1 to August 2006 amounted to 17,270. Creditors were what? At March 31, 2006 were 7,633. At August 20, there were 6,289. The gross profit margin on sales has been constant at 25%. Alright. Before we can start to construct a trading account for the period, you need to find out the figures for sales and purchases. This can be found by drawing up total debtors to the creditors accounts. Sales and purchases figures being difference on the accounts. Remember the last time. First thing is first, the balance from March 31, 2006 was 7,633. Should go here. Look at the creditors now. And then the amount that you paid now, payments creditors, able to August 20, amounted to what? 17,270. That would have been what? Debited in the creditors account, the total, and then the balance carried forward would have been the one for August 2006 now. 6,289. You add them up together, these two, subtract the balance BD from that, you get the purchase figure of what? 15,926. Alright. Then total debtors now. Same procedure. Balance BD for this case would be 14,278 coming from from March 31. Debtors from March 31, 2006, 14,278. Then you have a cash at bank, which is the amount which was paid, received, as in, just 31,745, and the balance for debtors now will be 12,333, which will go on your what? Credit side. Add up them both, you get 44,78 minus 14,278 from this one, you get 29,800. Alright? Just watch this carefully, observe what is being done, and follow, please. The trading account can be shown. No, the figure is already known. You have your purchase is 15,926, which you calculated up top here, and also your sales figure of what? 29,800. Now let's look at A, B, and C. So first we're gonna find A, which is 25% of what? Sales, which that will give us 7,450. That is A. Then you're gonna find B. You're gonna subtract what? A from 29,800, and that will give you how much? 22,350. And then the B now. For C, you're gonna subtract B from 28,406, give it 6,056. Alright? So the cost of goods stolen is what? Is therefore 6,056 as the closing stock. Right? So for the period would be looking like this. Alright? Thank you for participating in this video club, watching. I hope that you would have paused the video, written notes as you went through the process. Thank you for watching. Do you have yourself a wonderful day.